there's so much cash. Fundraising has been so good over the last 5 years that a lot of private equity investors just don't know what to do with it, especially at these valuations. Is it difficult right now?
Well, there's no doubt that prices are high by historic standards, and there's no doubt that investors want to get the money invested. And if you invest at high prices, you're probably going to get lower rates of return. However, investors are willing to accept somewhat lower rates of return to get the money invested. So if you have the money, would you rather have 0% return putting in cash or get a 14% rate of return? 14% being lower than 20%, but 14% is much higher than zero. So investors do want us to invest the money, and we can invest it, and we can get pretty good rates of return.
So how, it seems like a lot of private equity firms are having trouble figuring out where to put the money because they've raised $3 trillion in the last 5 years and are still sitting on $1.7 trillion in cash. What can they do with it?
Well, remember, these funds are invested over 5 years, and the money will get invested. We've invested last year, Carlyle put out about $22 billion of equity, and other firms did somewhat more. So I think the money can get invested. I do think the larger firms have an advantage because they have bigger scale and they can get the dollars invested. This conference is very unusual because I've been coming for maybe 25 years, and this is the happiest I've ever seen people because returns are good, fundraising is good. It's what I call global synchronous happiness. The LPs are happy, the GPs are happy. I've never seen anything quite like it. I gave a speech earlier today about how we have to remember that eventually the good times will end, but I don't think the good times are going to end anytime soon.
And you're still at a point when institutional investors want to give you their money. Why do they if returns are expected to continue to start to shrink?
Well, in the old days, 20 years ago, you might expect a private equity firm to get a net internal rate of return of 20%. Today, it might be net 14 or 15%, but that's still much better than anything else you can do legally with your money. So investors are wanting to get this money invested with us. So if you're a large sovereign wealth fund and you've got billions of dollars you have to put out, sitting on cash is not very good. So getting it at 14, 15, 16% net is still pretty good. So while the returns are down, they're still very good returns.
A lot of the investors I've talked to today are talking about the end of the cycle, saying things like when the cycle turns and that it eventually will. What do you see from your view? When do you think this economic expansion is going to come to an end?
All cycles turn. In the United States right now, we're in the third longest growth cycle we've ever had, 103 consecutive months. I don't know when it will end. It will end at some time. But right now, I don't see any end in 2018. I think the tax cut bill has propelled the U.S. economy further a bit longer. I suspect through 2019, we're in reasonably good shape.
On that note, I wanted to ask a question about Carlyle. We saw Ares, because of the tax reform bill recently, convert to a C Corp. That was fairly widely expected, and it makes sense for investors as well. Do you think that that's a good idea for Carlyle?
I think it's a good idea for Ares, though I can't really speak for them, but they have a large percentage of their income is fee-oriented, and so there's no real disadvantage for them to doing this. In Carlyle's case, we have a larger percentage of our income is carried interest, and therefore it would be somewhat not as favorable for our unit holders. We have looked at it, and right now we're comfortable with our position, but we're going to continue to look at it all the time. But we are right now not making a change, but we will continue to see what others do.
Do you expect a lot of others to do it? I mean, it seems to be more advantageous for the investor to buy shares in a C Corp, or at least it makes a lot of things easier also for the private equity firm to use those their own shares as currency.
It has some appeal to investors who can't buy the kind of shares we have, which are partnership shares. But right now, and obviously people are buying our shares, I think there should be a bigger float in shares of private equity firms. But I think it'll sort out over the next year or so.
Let's talk a little bit about valuations while we're on the subject of shares. Even so, in the public market, we see valuations in the low 20s. In the private equity deals that we saw last year, I think half of them were paying a price of 11 times or more EBITDA. So things are getting pretty pricey. What does that say to you?
Well, the average EBITDA multiple before the Great Recession was about 9 times. Now it's probably closer to 11 times, and that means that probably returns are going to be lower. On the other hand, interest rates are pretty low, and therefore I don't really think it's necessarily the case that you're automatically going to get a lower rate of return by a dramatic amount. I think it'll be somewhat lower. And I think rates of return in the net 14, 15, 16% range for large funds is realistic. I think smaller funds probably can get somewhat higher rates of return.
When you do these investments, obviously you're looking at a longer window than 1 or 2 years. I think 5 to 7 is always quoted as the kind of cliche time period. Do you worry about the exit time? Do you look forward and say, if we do have a turn of the cycle, it's going to be within the next 5 or 7 years?
Well, the average cycle probably for private equity is somewhere between 4 and 6 years, maybe 5 to 7 a bit. We do have, and others do have as well, long-dated funds. You might hold on for 10 or 15 years. But in the normal 4 to 6 or 5 to 7, I think you find a time at some point during the 4th, 5th, or 6th year to exit when the economy is not in a depressed state. So I do think that it's a good time to sell right now, and we've been selling a lot. Others have it as well. Right now, you can't predict when the growth cycle is going to go down. So I think right now people are still pretty happy with the prices they're getting when they're selling companies.
What do you make of the return to volatility that we've seen over the last month? I mean, it hasn't obviously collapsed markets, but we have seen things sort of wake up again and on the wrong side of bed, it seems.
Private equity hasn't really experienced that so much because we're not really in the markets quite the way that the public markets are. Yes, there's been a lot of volatility, but most of the downturn has actually been recovered. So we're probably back to close to where we were before the volatility occurred. So I don't think it's something to really worry about right now. I think the economy in the United States is in pretty good shape. Europe is in pretty good shape. Interest rates are relatively low. They're going up modestly. So I think the U.S. economy is in pretty good shape, and so is Europe.
It does affect a few of your possible exits, right? I mean, it affects IPOs, the IPO market, the secondary market. Do those look less stable to you post-volatility?
Well, IPOs are much less common than they were 20 years ago because it's harder to do them in many ways and get the values you want. So trade sales or sales to other private equity firms is much more common, or refinancing. So I don't think the IPO market being not as open as we might prefer is a big problem because there's so many other ways to exit.
One of them is a sale, obviously, to a corporation. Corporations have been very acquisitive lately. I think private equity purchases have declined as a percentage of all M&A 1% each of the last 3 years. So it was 11%, 10%, 9%, 8%. Why is that? Why is private equity losing out when it comes to making purchases? Or maybe it's the better decision.
Losing out. We're still investing a fair amount of money, but corporations have high stocks and they have a lot of cash, and therefore they can always outbid a private equity firm. For some years, when the stock prices were low, we could outbid corporations. But right now, if a strategic wants to buy something, almost certainly it's going to get it.
All right, so where are the good places to invest right now? When you're looking around a world of fairly high valuations, where do you go to find the best deals?
In terms of parts of the world, I think China is still very attractive. It has its challenges, but it's a gigantic market. I think India is very attractive right now. Brazil has coming back from where it was. It had a recession for 4 or 5 years, but now I think quite attractive. I also think in the United States there's some very good pockets of areas to invest in.
Are you concerned about China? We saw a spooky PMI number. The Hang Seng, I think, had the worst month of all indexes in the world after its best month in 3 years, the month before. What does that mean to you? Well,
if that's the case, you're going to buy things at lower prices, so that's attractive. Look, you've got 1.4 billion people. You have an economy that I think is somewhat capitalistic, though different than the American style. And I think you've got a lot of people who are very good entrepreneurs and good operators of business. So it's a very attractive place to invest.
And still an engine, or is it an engine for this sort of concerted global growth that everyone's talking about?
Remember, the United States is growing at 2 to 3%, and we're very happy with that. Europe at maybe 2% or so. China is growing at 6 or 6.5%, so it's much more than we're growing at. So yes, it's a major source of global growth, has been for the last 20 years, and will be for at least the next 20 years.
In the U.S., we just had the best consumer confidence reading, I think, in 17 years. A lot of people are putting that to the tax reform bill. Do you think that this Congress and this administration is really setting up the economy to continue to do better?
Well, I think the tax reform bill will help the economy. There's no doubt about it. Now, we borrowed a lot of money, and over 10 years, we'll borrow an incremental $1.5 trillion. We already have $20 trillion of debt. So at some point, we'll have to pay that debt off. But right now, I think people are feeling pretty good about the economy, and the growth rates, the unemployment rates are pretty good.
Speaking of borrowing and speaking of rates, but Treasury rates, what do you think about the talk of going over 3%? I'm already starting to hear doomsday scenarios from some people about what companies will do if it goes to 4.5%. Do you think rates are going to really start going up?
I really don't think they're going to go up dramatically. I lived in the White House when we had rates at 14, 15% in the late 70s. I don't think anything like that. Remember, we're so used to low interest rates. When they go up modestly, we still think it's high. But right now, interest rates are going up still very modestly. And by traditional standards, interest rates, even if they go up 2 or 3 additional turns this year in terms of 25 basis point increases, I think we'll still have low interest rates. In other words, if the Fed increases by 25 basis points 2 times more this year, even 3 times, interest rates will still be relatively low by historic standards, just high compared to where it was a year or 2 ago, but still manageable for firms like us.
You sound fairly optimistic, and you did in your speech earlier here at the Super Returns Conference as well. What are your biggest concerns, though? What are the biggest risks?
The biggest risks are, one, we have a lot of debt in the United States. At some point, we have to realize that has to be paid, and maybe people will one day wake up and say this is more debt than we really should have. 2, I do worry about geopolitical risk. You never know what's going to happen in North Korea, Iran, the Middle East. There's always geopolitical risk. Right now, though, I think the situation is pretty good. My biggest concern is when things often seem great, that's when something bad happens. So I don't know when that will happen, but right now I feel pretty good about the economy. I think the U.S. is in reasonably good shape. I do worry that at some point we'll end this cycle. I don't think it can go on forever.